If you're an Intel shareholder, 2025 is off to a good start, especially if you look at the performance of the stock in the past couple of years. But from a business point of view, we still have a long way to go. So while it's nice to see that the stock year to date is up 23.5%, and before the market opens, it's up another 5.2% on some positive news regarding Intel Foundry. So in this video, let's discuss that positive news. Let's discuss the Ohio factory delays and why they're doing that. Could that affect 18A? We're going to discuss that in this video. If you enjoy this type of videos, hit all the buttons. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first up, we've had this report. Intel delays $28 billion Ohio chip factory in New Albany again to 2030 or 2031. Intel promised $28 billion semiconductor project in central Ohio has been delayed again, this time by several years. The chip maker told the Dispatch late Thursday that its first factory would not be completed until 2030 and would begin operations sometime shortly thereafter in either 2030 or 2031, a sign of just how much remains in flux despite the company's commitment to its Ohio 1 operation. By the time it opens, Intel's first factory will have faced at least 5 or 6 years of delays, as it was originally scheduled to begin operations in 2025. Intel's second Ohio factory won't be completed until at least 2031 and will begin running in 2032, according to the company. Of course, when you read that, not that great. But we have some comments here from the Executive Vice President and Chief Global Operations at Intel Foundry. The changes were made so Intel can align its factory operation with market demand and better manage the capital responsibility. The changes will ensure Intel's Ohio fabs will be finished in a financially responsible manner that sets up Ohio 1 for success. I wanted to be upfront and transparent with you all about our current plan. In no way does this diminish our long-term commitment to Ohio. We will continue to scale our hiring as we approach our operational dates. Intel is proud to call Ohio home, and we remain excited about our future here. Now, on the one side, first of all, I don't think that it takes, 6 years or so to build a factory in the United States. If you look at a Mega Austin, a Giga Austin, for example, or Giga Berlin, or the Megapack factory in Shanghai, when looking at Tesla, of course, different type of companies, but still, didn't take them 6 years to build those factories. So here, the delays is really just them maybe waiting to see if the new administration is willing to maybe fund these projects a little bit more. Because remember, Intel did commit, I think it was around $100 billion of investment in the United States. Of course, there is that CHIPS Act, but then again, what was it? What did Intel get? Barely $8 billion, so $8 billion of $100 billion is not that much. It's not that much. So with this, there are a couple of people that say, oh, this is bad for 18A, etc., very bad for Intel Foundry. But remember that 18A, as long as the Arizona fab is still on track, 18A is not in danger. 18A is actually, performing quite well if you believe the internal comments. So Arizona is the most important one right now. If that's still on track, then we should be good to go. All the rest, yes, there have been some delays, but Arizona right now, very important to Intel, Ireland as well. But Arizona, just for the foundry side of things, this is the most important part. And as long as that one still remains on track, I don't think I should be worried. Then continuing on the Intel Foundry news, and the reason why the stock is actually up pre-market is because of this report. Nvidia and Broadcom test Intel chip manufacturing process according to Reuters. Intel shares are up over 6% pre-market following the report. The move is set to signal early confidence in the company's advanced production technology. Two sources familiar with the matter reportedly told Reuters that the test could indicate that the companies are considering committing significant manufacturing contracts to Intel. If so, it could potentially provide a much-needed revenue boost to Intel's struggling foundry business. According to Reuters, the test involved Intel's 18A manufacturing process. While the testing is ongoing, the report cautions that there is no guarantee Intel will secure long-term deals from either company. Of course, that makes sense. But usually when there is smoke, there might be fire. Or there usually is fire. We don't comment on specific customers, but continue to see strong interest and engagement on Intel 18A across our ecosystem, according to an Intel spokesman. The report also noted that AMD is evaluating Intel's 18A process, though it is unclear if the company has sent test chips through Intel's factories. Now remember, if we go back a year or even 2 years, these were the reports that came out. On the left here, you see May 30, 2023. Nvidia CEO says Intel's test chip results for next-gen process are good. Intel built Nvidia GPUs could be on the horizon. On the right, August 2024, Intel might get Nvidia as a Foundry customer soon, likely to produce 5,000 H100 wafers per month. And now we're getting that report from Reuters almost, 6-7 months later. So again, when there is smoke, there's likely to be some fire. And of course, that would be great for Intel Foundry, but they also told us that they don't expect Intel Foundry to be break even until 2027. But as they get more and more of those commitments, I think the sentiment around Intel Foundry will definitely change. And that's why I never wanted Intel Foundry to be sold. We've been talking about the Broadcoms and the TSMC maybe wanting to buy Intel Foundry, or take a stake in the Intel Foundry. I think taking a stake is one thing, completely buying it off. Intel, I think, to me, is just very bearish as an investor. Same thing with the other side, the design side, whether it's Broadcom or Qualcomm. To me, Intel, I want Intel to be the Intel that we have right now, because I do believe that the turnaround is happening. And like Jim Keller said, a very good and efficient Intel could be worth $1 trillion. I'm not saying it's going to be worth $1 trillion. I just think that Intel at $100 billion to me is extremely cheap. And if someone manages to buy Intel or parts of it, he's getting a very, very good deal. Now, knowing what we know today is that, well, Q1 is a bad quarter, right? Seasonally very weak. But even with a seasonally very weak quarter, I mean, it was a miss across the board, right? Revenue missed by 5%, gross margin missed by 330 basis points, and EPS, well, basically a huge miss there as well. So yeah, it's true that sentiment around the stock, with the stock being up 20+% year to date, sentiment around that might be getting a little bit better. And that's also because of, well, the acquisition takeover rumors. But I've always said the same thing. The business itself needs to show that it is turning around. Of course, a big part of the thesis, for me especially, is Intel Foundry, is 18A. And I think 2025 is when we're going to get way more answers than questions. Then on the client side of things are getting a little bit better. But of course, I don't want 1 quarter or 2 quarters of things getting a little bit better. I need to see that continuously each and every quarter. Hopefully that's what we're going to get in 2025. So caution here. While it's great to see the stock outperform already year to date, we still need to see the business continue to outperform. While it's great to hear those comments on Intel Foundry, especially 18A, maybe not so great to hear the Ohio delays, but then again, I think it's the smart thing to do. There's no reason to invest that much money right now on things that might not generate any revenue or profits for them for many, many years. If they can utilize what they have today, maybe at 100% capacity or close to it, it makes way more sense from a financially disciplined standpoint. So all in all, I think this is good news for Intel. It's very good news for Intel Foundry if those reports are accurate. But since we're getting these types of things now since 2023, in 2024, now in 2025, usually there is some truth to it, especially if you hear the comments that came from management in the last earnings call. So 2025, a very, very interesting year for Intel. Me as an Intel shareholder, of course, you know, I'm down now, I think 2-3% or so on my position. Not bad. Of course, a week or so ago when we were above $27, I was finally up on that position, but it couldn't stay above that 200-day moving average. It seems like we are going to start the week with another attempt to go above the 200-day moving average. If we look at what happened here back in July of 2024, we also tried, that didn't work out. That circle that you're, well, sort of a circle that you're seeing here is, if we look at the daily, we can see that there is a huge gap down there. We did fill that gap slightly with 50% back in November 2024. And then we almost filled it completely here mid-February. So we'll see what happens. That gap did start here at around $28, $29 or so. So all in all, I think 2025 is an exciting year as an Intel shareholder. To me, it's a do or die type of situation. Either you show me really in 2025 that things are working out, some momentum across the business, or I jump ship. I jump ship just like their CEO. And the new CEO that nobody knows of because, well, guess what? Still is no new CEO announcement, which is quite something. It's quite something, not gonna lie. Anyways, that's all I've got for you right now. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.